sir has appeared in so many programs other than our team in corporate professional. We try to bring out the topic which are relevant, which are topical, and which are need of the hour. And recently, there are something has happened in the market. That's why we decided to discuss this topic. So we are not discussing the topic. We are discussing that what is the reason and how the investor can find out the real reason. So they should be cautious and they should not be trapped in future, or they should be careful. So as you are aware, despite of tightening of legal and regulatory obligation and implementation of robust corporate governance frameworks, corporate fraud continue to occur because we are aware that whenever you plan something, the fraudster will search the way out and do something which is you can't think of. So they are always ahead. So, but these incidents tarnish the country's image as a whole, because we are not catering the Indian investor, we are catering the international investor. And the international investor, when they invest in the company, they think that whatever it is doing, the regulator and everybody is managing properly. So that's why they invest. So these incidents tarnish the country's image, business environment, and every regulator will see you on the different eyes, while also leading to serious consequences for stakeholders because they lost money, employee, they lose job, investor, they don't faith and they don't invest money in the stock market, creditor because they will not get money back, and vendors in society at large, everybody is a loser. Now, the episode of Gensol, we have seen that so many drivers were working in this company. Now, suddenly the operation stopped and their livelihood is now affected. So, in the SEBI, when did the forensic audit of this company, then there is a major debate within the Indian financial and auditing community. The case which resolved around LI's fund diversion, misuse of related party transaction, and financial misreporting by Gensol promoter is being closely monitored as a test of accountability of both corporate management and statutory auditors. The objective of webinar is not to focus this company only. It's a trigger point. And there are so many other companies which has done in the past also. So we should learn the lesson. And we should examine that what are the possibility, what are the way, how we should protect. So the purpose of today's webinar is that to inform our investors, to inform the shareholders or stakeholders. Because when I was mentioning about the tarnishing image and leading serious consequences, I'm not confining to the shareholders or of the company. Employees, investors, future investor, creditors, vendors, all are suffered. Okay. So today, people should not think that one fraud will lose the money. It will lose the money of the investors or shareholder, but it will lose the money of other people also. We have seen Kingfisher. All these people, those who are working, they were not getting their salary and they face consequences. So today, when we will discuss this topic, we will discuss of corporate fraud, strategy for resilience, corporate governance failure, where do we go from here, impact of corporate fraud on market sentiment, navigating the ripple effect. Now, this is something which is we have to just tell. Investor due diligence, what safeguard wealth in a post fraud or this type of episode, what people should do. Retail investor protection, building resilience against corporate scam, what they should understand and what are the issues they should do before investing. It is very easy to say investors should read this, investors should do this, but practically it is not possible. So today I extend a very hearty welcome to our learned panelists, we have Mr. Arun Malhotra. He's a founder of CapGrow Capital Advisor. He's an investment professional with experience of more than 30 years in portfolio management, equity research, and trading. He has extensive investment knowledge across the entire capital structure chain, including direct equity, convertible bond, high yield distressed debts, and structured transaction. And friends, I will tell you, Arun is working in the market since last 30 years. And Arun is running a portfolio management company called CapGrow. Now, he is having a 300-400 crore fund of the investor, and he is managing that fund, and they are trusting and giving money to Arun. Now, it is Arun's duty to invest this money at a right place. So, when Arun is doing research, then his first priority is not the return, but the safety of the investment. So we will understand from Arun that what are the safety guides, what are the safety things you are following, and that is what you are following. Other will also the same thing, same process. Other people should also follow. So Arun, welcome you for this program, and your experience and your guidance will definitely help investor and people. And you sometime you have invested in some money and then you came to know something and you have divested. So you have confined to your loss to that extent. Sometime you are getting some approach, the people are coming and you're not touching that company because of some reason. So your this experience and your some example will help, and you can guide investors in today's program. Then come to Mr. G.P. Madan. Is a founder of Madan Law Office and M&A Task Force, co-chair SOCM. He is a lawyer and insolvency professional, and more than 3 decades of profession and experience in corporate legal. He has been a chairman of ICSI and IRC in 2005. Now, Madan is also very interesting person in this particular this topic. He is coming as a legal luminaries. He is an insolvency practitioner. But the most important thing, he's an investor and he advises various people also. So his advice, his approach, and his governance topic, which he is giving to the board, various directors, various people, will understand that what is your take on this, how people should not come into trap of this. That we will discuss, Madan. Thank you very much and joining our program. And I have to just inform you, we have invited Mr. J.N. Gupta, and he's a proxy advisory firm's founder. But today there is some root canal and he has a pain. That's why he's not able to speak. So we will miss him. But anyway, Arun, Madan, and Manoj, Ravi will cover up this. And some portion I will do this. Manoj Kumar is a partner head, M&A and investment banking corporate professional, and Manoj is every day looking after and talking to various investors, various companies. So he is selecting good companies, rejecting bad companies. So what is his criteria? What he thinks should be there? We will discuss with Manoj. Then we have Ravi Prakash, associate partner, security law and corporate litigation. Ravi is managing security law cases of various companies, various investors. He's fighting on behalf of investors. So Ravi will be the right person to tell us that what is happening in this case. So Ravi will tell our legal aspects also, that how investors should be cautious and what types of fraud people are doing. So when you say the SEBI is doing this type of search, so other people will avoid if they are doing something wrong on this part. So friends, today's program structure will be like this. First, Arun will speak, then Madan will speak, then Manoj and Ravi will speak. I'll give the introductory remark to my presentation about this topic, behind the numbers, unmasking fraud and finding real growth. So this is my topic. So I'll request Shivam just show the presentation, and then Arun can take over. So friends, the topic of today is behind the numbers. So number mean that whatever is जो दिख रहा है, हम लोग कहते हैं जो दिखता है वो बिकता है. बट यहाँ पे इन्वेस्टर को देखना चाहिए कि जो दिख रहा है वो सही है या नहीं है. So we have to just unmasking the numbers, identify the fraud and finding the real growth, whether this is not there or not. So friends, the stock market works on the game of greed and fear. As you are aware that people are working on greed. So greed is make more money by any means, and fear is of loss or getting caught. So the cartoon is the sky is falling. So sell sky. Okay. So the way people create this type of things. And there is another aspect, greed and fear. There's a new concept coming in, FOMO, fear of missing out. So when something is happening, people work that I should not miss out. And that's why low papas karan. So always greed is a reason of doing something wrong also. If you see the type of capital market fraud, you will realize there is a accounting fraud Satyam has done by fictitious revenue, related party transaction misuse, Gensol recently, Gene Entertainment, fund diversion through shell entities, DHFL, which has done 31,000 crore siphoning, insider trading and price rigging, the zeal, then IPO misstatement, midfield industry, Birla specific, Ostra Co. SEBI has taken action against these companies, and the Ponzi type borrowing and lending, that Sada group Ponzi scheme. This type of fraud is happening in the market. Now, what is a modus trendy? How frauds happen? So the one is a related party layering through unlisted company. That is one major point which is happening. Then overstatement of earning using fake invoice. So they show that the turnover is say 100, they will show 200, 300 crore, and 200, 300 crore, the difference of 200 crore bills, fake invoice they will create. Then misuse of IPO fund and debt fund, you have taken money for some particular purpose and using for some other purpose. Then preferential data sharing for market advantage. Now NSC is giving link to everybody, but in NSC co-location case, few people have taken advantage of faster execution, and they created a loss to other investors, other brokers. That is also happening. Auditor manipulation or resignation just before disclosure. So what is happening? Sometimes auditors is also involved, whether it's a financial or whether it's a secretarial. People are not seeing resignation before disclosure. Something is happening, so they resign. Then shell company created solely for inflating turnover or parking losses. That is another aspect. Your company is governed by the market value of the your share price is on the basis of company's value. So what you are doing, the loss which is happening, you are transferring to a subsidiary company and you showing your company as a profitable company. This is happening. Next is how the real red flag for trained analytics. Now, sometime what is happening, Manoj will discuss in detail and Arun and Madan will also tell about this. Sometime what is happening, profit is raising, but negative cash flow. This is one of the signal. High trade receivable and other income spikes. So sometimes you are seeing the operational income is less, other income is high. That is also a alarm. High trade receivable, that is also a one indication that you are selling, but your money is not coming. Excessive capital in progress without output. You have continuously, the stock and trade is going on since so many years. That is happening. Auditor of directors resignation, that is also a one signal. Excessive promoter shares pledge. Sometime what is happening, whenever a company shares pledged by the promoter, it's a red alarm, and you have to just see whether it's a genuine purpose or whether it's a just they have pledged because they are not in a position to manage company's growth. Undisclosed sudden RPT, especially before funding rounds. So fundraising round, something you are doing, and then you are transferring something on RPT transactions. Then this is trained analytics. But now, what some red flag for layman investor? Sometimes share price is going up, and there is no clear reason. Possible rigging is going on. Promoters lavish lifestyle, their interview, their positioning versus stagnant companies' growth. That is another aspect. Company repeatedly raising money without explaining uses, why they are raising, what is the impact on this. High promoter pledging, which I have told you, this is applicable for analyst as well as the investor. Multiple director resignation, that is also a layman investor should be bother. Auditors resignation. Overuse of buzzword like AI, blockchain without business clarity. And I will tell you, in India, there are so many times it is happening. In 95, there was a finance boom. So all companies have converted their company's name finance. Then in 2000, .com. So every company, they were coming, they changed their company's name .com, .com, and then they raised money and the investor jumped into this. Then again, biocap. This is also a some buzzword has come now within technology, and now AI and blockchain. So these are the some things. So you have to see the memorandum of the company, that whether they have changed it or they are doing something, or what is their business in this. Those stock exchange and SEBI has put in some restriction now. You can't change name if your business is not up to a percentage. But even then, people manage this way. Inconsistent or delayed result. Whenever a company is not able to give result, you just think something is wrong happening. Baiju is one of the example, which is an unlisted area, but it is one example. Then come to the related party transaction, key fraud channel, Gensol, which has diverse fund in the Blue Smart and promoters entity. DFHL created fake borrowers through RPT. G, round tripping of inflated revenue. These are some related party transaction they have used. Now, some of the protection practical advice. Though Arun is the right person to tell, but I'm just telling from my experience, you diversify investment across industry and market cap. Don't put all eggs in one basket. Stay away from hot tips and penny stock. Focus on long-term value, not short-term. I'm just getting a call from my friends and other people, those who jump when the market is going up. कोई सस्ता वाला शेयर बता दे यार, 10, 20, 50 रुपए वाला. But they are not understanding, if you are buying sasta wala share, that is also a risky. But if you are investing higher value share, which has a long-term value, that is there. And the most important thing which Arun will tell, earlier people were thinking that short-term and long-term or medium-term. Long-term means 5 years, medium-term is 3 years, short-term is 1 year, 6 months. But now short-term definition and medium-term definition has changed. Short-term means kal, parso, what will be the result? And then that's why greed and fear and things is happening. People are earning money and then putting money in anywhere where they are getting any tips. Then avoid companies with promoter pledging above 40%. You must verify, check purpose of this. Read governance section in annual report. Look for independent director attendance, RPT policies. Now you may say, I'm not expert, then why are you investing in the stock market? If you are investing, then this is your hard-earned money. You must read these documents. Follow SEBI orders and alerts. Check SEBI and MC website in which company they have passed an order. In place of investing this risk area, and you have no time or no method to do research, then you consider mutual fund or ETF, which is very, very good game and less cost on ETF, and these are professionally managed. Engage in AGM, ask question and use shareholders voting right. And nowadays, our companies are putting their investor presentation also on the website of their own website and the stock exchange website. You must see this and you will get what growth pattern they are telling. So, friends, this is just advice, some poor reflection on such fraud. This is beyond compliance. It is also, compliance is sometimes tick box also. They follow letter, not a spirit. Then interlinked oversight system must work in harmony. Whatever system you are making, you should work in the harmony. Board's role is under the spotlight because now board role is slowly increasing and becoming very, very effective. Auditors are gatekeepers, not bystanders. So they have to check, because when we were studying, we were saying the auditor is not bloodhound. He is something else. So now the time has come that role of auditors should also change. Must empower whistleblowers, because whistleblower policy in some companies, something is happening. They are the people who knows what is happening correctly. If we can ensure and empower these whistleblower, then these red flag will come very fast, and you can avoid the manipulation. And the last friend, governance is a new alpha. We have discussed this so many times, that what is the meaning of governance. So in today's market, it is not valuation multiple, which we were thinking earlier. Now, other than the valuation, governance quality that create long-term wealth is very, very important. There is a possibility if the management is good, governance is good, today value is less, but tomorrow it will create. Trust is the real capital. Companies must go beyond compliance to build credibility. As investor and professional, our collective duty is to demand transparency, support whistleblower, and uphold ethical standard. So these are the some governance new alpha. And then Gensol, DHFL, ILFS, not just case studies, they are warnings. So today, when the other speakers will talk, they will tell you that how they have done something. So it is not a storytelling. It is a telling that how you can avoid these warnings. So let's ensure we act before the next headline of the company. Friends, trust is the real capital in market, and trust is not enough number alone, but through conduct, governance, and truth. So this is one part. And the very important quotes I got today: law blocks roads for fraud, and greed builds tunnel. So you can just understand that if you are doing something, you want to stop something, like India border crossing, the inflator is crossing India border. So they are not using the main road, they are using tunnels and doing this. So rather fail with honor. This is a message to the investors, or the corporate world. Rather fail with honor than succeed by fraud. That is because if fraud which is taking place, it is not affecting few people, it is affecting the smart, the small investor, and they face lots of problems. So with this is my opening remarks. I will request Arun, that I have given one overview. Now you can take, you suggest, you tell us, after Arun, Madan will discuss. So my purpose is not just storytelling. My purpose is that we should warn investor, we should suggest them what they should do. Over to you, Arun.
Yeah, thank you, Pawanji, for an exhaustive coverage, what has been happening in the markets. And thank you all for inviting me. I think this court, whatever has happened in Gensol, I think that is the company in focus as of now. It is happening over the years, and it relates to the human greed. That's the basis of whatever happens. And in this scenario, or whatever has happened in this, I think there are two layers of failures. One is corporate governance, and the second is cheating, fraud, forgery that has happened. And when I say corporate governance, most of the corporate governance is based on internal mechanisms and self-declarations. So whenever, if let's say somebody is greedy, somebody is trying to exploit the system, he or she is going to basically make declarations which are not true in nature, which do not reflect the exact financials of the company. And that's where the fraud, the forgery happens. And if you see this company, there have been multiple red flags, not one red flag. There have been multiple red flags in the last 2, 3, 4 years, which should have sounded the investors, the retail investors, and I believe, or I hope, that if they would have looked at some of these red flags, then we would have avoided this fiasco much earlier. Some of the red flags which you enumerated, Pawanji, which normally happens in corporate frauds, all were present all of them, right, starting from resignation of independent directors, very frequent changes in the senior management level, corporate CFO putting in their resignation for personal reasons frequently. Promoters selling, promoter stake, if I recall I think correctly, has declined from 70% to some 34%. And when we talk of the shareholding, the promoters, their pledging was close to 100%. In terms of, again, shareholding, there was no mutual fund holding. I think whatever maybe one or two names you see, they were all entities that do not, they have not invested, they have parked these security, my suspicion. And what were the other red flags? I think that's very curious. Everybody would be very curious. There was a default in the past. There was a delay payment, but there was no disclosure. And delayed financial results were delayed. They were not published. They did not came out to the public. They did not disclose the financial results. Then the audit and the remuneration committee and the compliance committee, they were reconstituted couple of times, which does reflect that there is something more to it. So all of these, if you combine, these are on the corporate governance internal mechanism side. If you look at the financials, I will also come to the stock price. If you look at the financials, the balance sheet, if I can read the numbers, if you just give me 30 seconds, the sales of the company have increased from merely nothing, 81 crores in 2020 to 1400 crores in 2020, last 12 months trailing. You tell me which business can provide you.
I think your connection is unstable. We are losing voice in between. So just
hold on, Pawanji. I will just open the door. Yeah. Is it better now?
Yeah, it is better now.
Yeah. So what I'm saying is the financials, the revenue has increased from 70-80 crores to 1400 crores in 4 years. While in terms of tax, even though you see tax payment of 33%, but when you go to the cash flow statement, there is no payment of tax. So there is no cash outflow, but they have shown cash paid in the P&L statement. So even the financial books, if any analyst would have spent half an hour, 30 minutes on this, he would have clearly realized the fraud that was undergoing beneath this. And you also mentioned, Pawanji, that most of these frauds happen in the, वो जो exciting sectors होते हैं उस time के. So last 4 years, the bull market was, the premise of the bull market were couple of sectors, and one of them was green energy, renewable, EV. And the company was all across the social media trying to pitch that they are going to be one of the leaders in this segment. And everybody was as if they sun or something to the ground and make huge profits. So the market, the stock price, now coming to this, so internal mechanism, financial balance sheet, cash flow, all messed up. And then the stock price, it was some 20 rupees in 2020-21, went till some close to 1250, 1300 rupees in 4 years' time. All this, if you see, is a culmination of a failed corporate governance, a fraud and forgery on the retail investors, because there were no institutional investors. So my sense is that why these happens. I have seen enough of bull markets starting from 92, and every bull market brings these kind of cockroaches. If the question is there only this cockroach? My sense is there would be other cockroaches also in the system. But if you go take a step behind and go back into what has led to this, what were the red flags, and if you just make a checklist, ye hai, ye nahi hai, ye hai, ye hai, I think any investor with spending half an hour, 1 hour would have realized that the company was just sitting on a huge corporate fraud. And why this happens, I think I would, the team here is much more accomplished. But as a market astute investor, our sense is that in India, it is a self-declaration mechanism. So most of the companies, they have to do fraud, they self-declare. And when they get caught, the legal mechanism to enforce accountability, to enforce and retrieve the funds from the fraud, that has been very slow. And finally, it is always the retail investors who suffer through these corporate frauds. There are a lot of people who should be intermediaries, who should be held accountable, right, starting from the management, right from the independent directors. I would say even the employees, because if a CFO does come to know, I think he has a responsibility to report as a whistleblower to SEBI. In this case, this best part is there was a whistleblower complaint in June 2024, but it did not surface until we saw a letter of default from the credit rating agency CARE. So I think there are a lot of, I would say, things which were not normal, which did indicate that something fishy is behind all this. But because it was bull market, because retail investors were making money, if you tell them, you look at this is nothing, they will always say, no, next month to itna price ho jayega, mera itna return aa jayega, main to nikal jaunga. Every investor thinks that he is smart enough that he will be able to exit before others can. And we have seen enough of markets. When you enter, the pipe is broad, the diameter is much larger, but when you try to exit, you get choked. That's what is happening in this, especially in these fraud firms, and it's a downward circuit hit. And it's only the investors who have lost money. Just imagine this kind of a company having 4,000 crore of market cap. It's just a few months away. And I'm not talking that for maybe, maybe a year. I'm talking of early January, first quarter of 2024. So 4,000 of crore promoter holding some 50-60%, 2,000 crores he has made in the last 7 years, at least in terms of market cap. Obviously, he couldn't exit. So investors should always look at what is behind numbers, what is behind market cap, and what is the legacy or the background of these promoters. Most of these promoters who do this do not have a background. This company came into the SME platform, and since then, I think people have not looked any history beyond 2019-20. There is no technology, there is no economic moat in the company. Still, investors are giving a 4,000 crore kind of market cap to a shell company, I would say. So I would probably just end here in my initial remarks, and would be happy to engage further. Over to you, Manoj.
Okay, Arun. Thank you very much, Arun. Thank you. So, Arun, your this insight and the important points which you have suggested, and the point where the market, how these cockroaches are taking over, is really eye-opener for all of us. But which I told you, greed and fear is sometimes, despite of knowing. Now come to our next speaker, Mr. Madan, who will tell us, because he is an investor, he is a professional, now he is an advocate, he is on the various, he's a teacher, uh, he is giving lecture on governance, he is advising people on investment. So he has a multifarious role. Over to you, GP.
Thank you. Thank you, Pawanji. Thank you, all my dear co-panelists. Thank you, participants. Welcome to this another milestone webinar on a topic on which, on everyday basis, the pink paper as well as the financial channels are raising their voice. Where everybody is gone. I think my screen is blank now. Am I talking to my... yes, Manoj, koi to ho yaar, please.
I am here, sir. I am here. Yeah, we will continue.
Yesterday I was at Goa. I had 2 sessions on corporate governance for Indian Institute of Corporate Affairs. Around 46 participants were there, including directors, independent directors, and aspiring directors. Can you believe these 2 sessions of 2 hours each they were revolved around Gensol only? The participants wanted to know what has actually happened, what the government and the regulator is doing, and what is there in store for the stakeholders. Are the people losing faith in this system? Is corporate governance on papers only? What we, the professionals, are doing to uphold the principles of corporate governance? Is the approach there to tick in the box approach only? Or actually we are complying with the law in letter and spirit? What these independent directors are doing? What the auditors are doing? What internal auditors are doing? What practicing company secretaries are doing? What company secretaries are doing? And what bankers are doing? And what other professionals are doing? Whether the promoters of these companies where the frauds are happening, are they doing frauds of their own? Or is there any connivance or support of the professionals also? Whether the professionals are beneficiaries or whether the professionals are just supporting for the sake of their fee or their salaries? All these questions were discussed yesterday. And whatever has happened, Pawan, in the case of Gensol, this hasn't happened first time. It has been happening.
Yes.
It is happening today. And I'm pretty sure it will happen tomorrow also.
Yeah.
If we do not change ourselves. If we, the individual, we, the professor, do not change ourselves, it will happen. It will continue to happen. Regulator will keep on strengthening the regulations, and we will keep on finding the loopholes, and we will keep on using those loopholes to our own personal benefits. This is what has happened in this case, in Gensol also. I was going through SEBI order on Gensol, and believe it, it's an interim order. Interim order on the basis of information gathered. It is not on the basis of investigation. Investigation yet to follow. It's an interim order. And see the fallout of the interim order. Promoters are gone, companies business is gone. Stock market price has fallen by 90%. Though not over the last 10 days, but over the last 1 year. The market cap, which was somewhere around 4,300 crores. On today's closing price, the market is closed today, on today's closing price, it is 346 crores. So more than 92-93% of the wealth has gone, capital market cap has gone. What will happen after the final order, I fail to understand. This is the fallout of interim order. But interim order surprisingly has also taken 7-8 months. Now, during these 7-8 months also, my question to myself, what these professionals were doing with the company? Why did they not come out? Why did they not disclose whatever they wanted to disclose? Why did they conceal the things? Day in and day out, I ask all my fellow friends to please read section 447 of Companies Act 2013, which talks about fraud. And the fraud has been defined as any action, omission, or concealment. So even concealment is a fraud, even omission is a fraud. And knowing the fact very well that the minimum punishment for a fraud is minimum 6 months of imprisonment, still we people are doing it. Still people are supporting it. Why? Because so far actions have not been taken. Law has not been enforced seriously. The day this law is going to be enforced seriously, हम लोग भी जो है ना बंदे बन जाएंगे. But because for least enforcement of law or no enforcement of law, हम लोग सोचते क्या होगा देखा जाएगा. I am reminded of a quote of one of my professors. Pawanji, you must be knowing Professor Rajiv Khanna. In one of the lectures around 12, 13 years ago, I still remember that quote, that why all these things, all these frauds are happening in India. Reasons are two. Number one, we don't have fear of law. And number two, we don't have respect for law. Forget about respect for law. Let's not respect. There should be some fear of law. हम कहते हैं ना डंडे के यार हैं. लेकिन डंडे के यार हम तब बनते हैं when there is डंडा. When danda is not there, then there is no dar at all. I being the same person, the moment I go to Dubai or the moment I go to Singapore, I become danda without knowing the law of that country. I know that very well, even if unknowingly I do not comply with any of the law there, I'll be put behind the bars. But here I know even if I do something deliberately, nothing is going to happen to me. जुगाड़ हो जाएगा, कुछ ना कुछ कर लेंगे. And this is what happened in Gensol also. That you listed yourself on SME exchange. Then you come to main board in 2022 at BSC. In 2023, you come to NSC. Now the shifting, whether I ask this question to myself, whether shifting from SME board to main board is so easy. Did I comply with tick in the box approach only? And I got listed there on the main board. And the moment I got listed on the main board, it was khula darbar for me. कि अब मैं जो चाहूँ वो कर सकता हूँ. And thank God that they were going for split of shares, and all of a sudden, now SEBI came to know, no, okay, now this is also going to happen, split of shares, let's go into this. And when they entered into this, they ventured into this, they found, no, the things are hunky-dory. Things are not fine.
Manan Sahab, there's one issue.
Yeah.
The split of shares should be restricted to the company which has a higher value. If 20 rupees shares or 25 rupees shares and then doing a split is a clear-cut manipulation sign.
But this share price was not 25, no? It was not 25.
2,200.
Yes. Actually, it was all stage managed.
It's stage managed.
It was pre-planning. It was a 5 years plan, as a 5-year plan of Government of India. It was also 5 years plan. What ultimately, when they came to this assembly in 2019, this was a plan. What are we going to do over a period of next 5 years? उसी समय decide भी कर लिया कि कितना पैसा कहाँ से route करना है. And I was going through one SEBI order, interim order. They are given a chart, beautiful chart, कि 10 करोड़ रुपया कंपनी से कैसे निकलता है थ्रू डिफरेंट एंटिटी, वही 10 करोड़ वापस कंपनी में पहुंच जाता है थ्रू प्रेफरेंशियल अलॉटमेंट. और वो 10 करोड़ रुपया दिया गया यूज करने के लिए, दिया गया 10 करोड़ रुपया आप यूज करो, सो टू लेवर द अदर मेंबर्स ऑफ द पब्लिक कि हम 10 करोड़ डालें या आप 100 करोड़ डालो, 200 करोड़ डालो.
तो मदान सर, जो पैसा वापस जाता है उसमें एक और लेयर बन जाती है. टुडे यू आर द शेयर होल्डर, सो यू आर द ओनर. Tomorrow, Manoj, the money is coming back in the company in the name of Manoj. So now Manoj and you both are owner of the same cost पे दो लोग owner बन गए.
Yes, absolutely. This is what has happened. यहाँ वो 10 करोड़ कंपनी से निकला है और कंपनी की होल्डिंग कंपनी उसमें प्रेफरेंशियल अलॉटमेंट ले लेती है 10 करोड़ रुपए की. The money goes to another sister concern. From sister concern, it goes to individuals. From individuals to the holding company back to the main company. This is how the money has been routed. I mean, where from nobody bothered to check where from the mother of these promoters got so much of money to put in as preferential allotment. Where from the money has come to invest in a DLF Camellia of more than 50 crores of rupees? Where from other properties have been cornered? Nobody bothered to check that. And when something happens, all of a sudden, these independent directors, they come forward and they put in their resignations. I just went through all the resignation letters, you believe it. Personal reason, personal reason, personal reason. Nothing more than that. Now, all of a sudden, what has happened with the personally? Somebody is saying now my entity, my organization, I'm working somewhere and my employer doesn't allow me to work as independent director in any of the companies. Today only the stipulation has come. Was it not there yesterday? Why this 15th April is so sacrosanct, the date of the order of SEBI? Why 15th April is so sacrosanct and every independent director resigning on the same day? Somebody is saying, I have some venture in Patna, I have to go there, so I don't have time to devote for the affairs of the company. Same thing I witnessed in the month of February this year. Against some profits in the last quarter, some profit in September, company shows huge losses in the quarter ended December. And all of a sudden, one by one, all 4 independent directors resign. Managing director resigns, executive director resigns, company secretary resigns, CFO resigns. Everybody's out of the company. And one single ground, personal reasons. Now, this is despite the fact that the SEBI has said after 2019 amendments, on the basis of the recommendations of the Kotak committee and the discussion paper which was there in March 2021, SEBI has very categorically said that you need to mention the detailed reasons, give a confirmation that these are the only reasons, and also they mention there is no other material reason in addition to the above reasons. Despite all these people are resigning on these grounds, personal reason, and then they are saying these are the only reasons. There is no other material reason. See the audacity of these independent directors. I tell you, people are losing faith in this system of independent directors because this concept of independent directors was introduced just to ensure that these independent directors become the helping hand, become the extended arm of the government and the regulator, and they will be there to take care of the interest of all the stakeholders of the company. But what they have been doing, first of all, they do not open their mouth. And once some action is taken by the government on the company, they just tender their resignation. Okay, thank you very much, I'm going. According to me, all these independent directors should be blacklisted. Just to give a message to other aspiring independent directors that tomorrow, if you try to do this, you will also be blacklisted. And the blacklisting should not be only from the point of view that you cannot be appointed as independent director, but this blacklisting should be from other angles also. Some of the benefits or facilities or the recognitions which are there for come through the individuals from the government, those should be withdrawn if you behave like this. I'm not saying that in all the cases personal reasons are bad, no. But in majority of the reasons, personal reasons are bad. Everybody, you can't resign on the basis of on one day, some news comes and you resign. I was just going through in one of the letters, day before yesterday only, when I was preparing for this Goa conference. In one of the cases, Pawanji, one KMP resigns on 12th of March, sorry. And KMP is resigning with effect on 15th of March.
Okay.
Can somebody resign with 2 days notice and knowing very well 13th, 14th are holy holidays? There's just 1 day notice. On 12th, resignation is given. On 12th, resignation is accepted. I saw the resignation letter also. It is accepted. And reasons given are, I want to pursue some better opportunity outside in the industry. Can it be the genuine reason? And as Mr. Arun said, if such resignations are there, it is a red flag. So either this KMP has been forced to resign, or this KMP has resigned, that something is wrong is going to come, and I want to get out this company. I don't have guts to open my mouth. I don't have guts to pen down something. It's better to resign and get out. This is what has happened in Gensol also. Independent directors resigned. Now, I fail to understand when SEBI say that there are 260 crores of loans, unaccounted money. Promoters have failed to show there, promoters failed to establish what for this money was raised, where the money has been spent. Rating has gone down. Falsification of comfort letters from IRDA and some other company. I think that this was IRDA and Power Finance Corporation. False documents. I reminded of audit committee of Satyam. When the false bank statements were produced before audit committee, no balance in the bank, but the statements were showing more than 4,000 crores of money in the bank accounts. How these false documents are being generated and they are being produced? What these audit committee members were doing, what internal auditors were doing, what CFO was doing, what director of finance was doing, what auditors were doing, what secretarial auditor was doing when he says the company has established system to ensure compliance with all the applicable laws. What about CEO certification? What about CFO certification? It means everybody in hands and gloves. Either they are getting something in return or they don't have any other better opportunity to survive for themselves or their family members, and they are just signing any damn thing. They are just saying yes, they are becoming yes man. That HMV के रिकॉर्ड आते थे ना पहले, his master's voice, तो ये सब के सब his master's voice बने हुए हैं। और ये तो सिर्फ एक एग्जांपल है। अभी आज सुबह में देख रहा था केरला सीएम की डॉटर involved in some scam. Some personal expenses have been booked in one of the listed companies, I think Cochin Mineral. Some personal debt has been transferred to the listed company. सोच के देखो. Another scam, I don't know whether that actually will remain a scam or not. The time will tell. Recently, the IndusInd Bank. How these derivative losses and derivative profits have been shown in the books of accounts. How the directors were signing that all the accounts of the company have been prepared. While preparing accounts of the company, all the applicable accounting standards have been followed. What the auditors have done while auditing the accounts of the company, whether the accounts have been prepared as per auditing standards or not, or in accounting standards or not. So these are some of the examples of scam which are happening. The only thing is that now regulator has to be very strict. And if regulator becomes strict, then only the corporates raise the voice. काम तो किसी और ने किया, जो fraud किसी और ने किया, why we should be punished? And yesterday I was reading that article also which Mr. J.N. Gupta wrote in the newspaper. When we go to airport, everybody gets checked, thoroughly gets checked. We don't raise our voice. We surrender ourselves. Please do check whatever you want to do, because it's for the security of everybody. So therefore, here if the government becomes, the regulator becomes a bit strict, that it becomes strict. Recently, we have seen the examples of related party transaction standard, which was when it was released, and it was said that okay, 1st April 2025 shall be the applicability date. Hue and cry in the industry. Ultimately, SEBI had no other choice but to defer the date of implementation to 1st of July. But still, corporate sector is not happy with that. Corporate sector still says, okay, something, so we need more, something more required to be done. It is to be eased out. Everybody is in favor of ease of doing business. Government is also in the favor of ease of doing business. But when the corporate or these fraudsters, they try to take advantage of the provisions of law, then government has no other option, regulator has no other option but to make the law very, very stringent. I think it's high time that the laws are made stringent and these fraudsters are brought to the books and severe punishments are granted. Not only to the fraudster, but all the conspirators also. The definition of 447 should be implemented in letter and spirit. अब 5, 7, 10 जरा ऐसे केसेस करके देखो, थोड़े रूलिंग आने दो, जजमेंट आने दो, सेंड देम बिहाइंड द बार्स, आधे लोग वैसे ही अपने आप ठीक हो जाएंगे. Only thing is that the danda has to be there as danda, and danda should not be a piece of paper only. I think these are my opening remarks. I'll be ready for available for the Q&A session also. Thank you.
Thank you very much, Madan. Thank you giving the advice and your uh, analysis of the law, reaction of the industry, reaction of the what the market is doing, and the best example of the airport checking is absolutely right, because we are aware that this checking is saving us from a big disaster. And big disaster means this can harm me. Same thing if the corporate world and other people should understand that I am not doing something wrong, other is doing, but if somebody is doing wrong, it will impact me also. So I will also come into that category. So it is better that if I'm neat and clean, I should come forward and suggest. That's a good way to connect. So now, Manoj, you are doing and dealing with companies, you are reading balance sheets, you are reading analysis, you are doing valuation, you are suggesting company what should be your value, you are arguing them on various aspects. So please tell us what are the ways, what are the process with these manipulations are taking place and how the investor should be protected. Over to you.
Good afternoon, everyone. Good afternoon, sir. So, yes, obviously, the topic is very much relevant, but it is also a fact that frauds are not a new thing in corporate world across the world. Maybe in America also, Enron, WorldCom, etc. In Japan, Toshiba accounting fraud. So similar things was happening across the world, and it will be happening. It has happened in past and will happen in India also in future. So because there is a greed, there will be manipulations of various things. But the same goes for the investors also, small investors who are also under greed, going to buy shares of such companies which are basically the penny stocks, the companies which can be told the multi-baggers, etc. So those terminologies are being used for such type of companies which can give you extraordinary return. But in real life, this is not possible. This is not possible to get 100% return in a year or so. So if you are expecting such kind of result or such kind of growth, you are making yourself party or culprit party to such kind of frauds. So yes, in India, several scams happened, like Satyam scam, Kingfisher, ILFS, Bhushan, MTech. There are hundreds of such scams. So Gensol is one of them. Uh, and every time similar kind of advice are given, government takes certain stands to make the corporate governance more stronger. There are changes in the company law also. The NAFRA has come, which is which is making accounting people, accountants and auditors more and more responsible. Still, such kind of frauds are happening. So we have to look at the outcome of that. Whenever there is such kind of a scam, there will be financial losses to a lot of people, including investors and other people connected to the ecosystem of the company. It erodes the trust of investors in the capital market and also to the banking system, etc. Then obviously there will be, if the size is big, it will also create capital market instability. So it is very important to, whenever we are investing, we should be very much clear. If we are financially much stronger, then only we should invest directly into smaller size company, or otherwise go to the, let's say, mutual funds where there are professionals who are looking into the financials and investing based on their expertise. If you don't have expertise, don't invest directly into smaller size companies or mid cap stocks. That is the best advice for investors. So wherever we work on any company, we should look deep into the financials, and if there are financial statements of the company is the first thing which gives the red flags or the green flags for any person who knows the financials. If the financial statements are like a health report of a person, if it is too good to be true, then there is a need for second opinion. There is a need to go deep into it. So we have to see inconsistency or overly optimistic financial statement, erratic growth, unexplained spike in the top line or bottom line, all these are red flags. We have to look deep into it. If there are related party transactions like we are discussing, everyone, government is also very much concerned, SEBI is also very much concerned about related party transactions, which is the one of the most common way to siphon off the money from company or listed company. So if there is high related party transactions and they need to be assessed rationally, go deep, we have to go deep into that. Then cash flow is very much important. If the profit is increasing but cash flow is not, then it is a red flag. We have to look into further in detail of the financial health of the company. Similarly, if there are, let's say, top line is growing, but simultaneously there is a extraordinary increase in stock or debtors, they are not going in proportion to the top line, then there is some problem in the financial health of the company, and we have to look into it. If there are like everyone has told, if there is a change in auditors, frequent change in auditor, because they are the first person who look into the financial statement, and if they feel insecure or concerned and they are not able to speak their words, then they used to resign from the company. If they are resigning frequently or there is further regular change in the auditor, then there has to be some concern about the financial health of the company, and investors should be cautious about that. Even professionals should be more cautious wherever they are advising on any of the corporate transactions like valuation or IPO, etc., etc. Then the governance issues are very important. So if the board of directors have very young people or not strong people as independent directors, then it is like Madan sir was telling, they will be yes man to the promoters. So their presence is of no good for the investors, because they will not be able to perform their duty, which is to take care of the interest of all stakeholders, question the promoters, question the management, and question the numbers of the wherever there is a result, they are presented to the independent directors or board of directors. They should have the capacity to question those. If they are not in a position to question, then they are of no use. So weak independent directors can be easily a red flag for any corporate transactions, either as an investor or for any M&A transaction, etc. Then we have to look into if we can go deep, we can look into the behavior of the promoter, excessive pledging of shares, selling of shares as and when they get the opportunity, or if there are allegations of insider trading, etc. Then it shows that there is a distress, or the promoter do not have confidence over their own business. So this is a wrong message to the investors. Then if the structure of the corporate is very opaque, there are offshore entities, there are subsidiaries outside India, or even within India, there are multiple entities which are not clearly defined, or not logic of having multiple subsidiaries, then this shows that there is an opaque corporate structure, and it is a red flag. It has to be looked deep into. Whenever such kind of a structure, there is option for the promoters or the management to corner money, siphon off the money, and give various justifications which are just to showcase that they are doing good, but there must be some problem. If there are regulatory non-compliances, fine, or let's say simple quarterly results are not coming on time, then there is high chance that there will be some manipulation. They want to clean up their balance sheet, or maybe the debtors, bank loans are not getting paid on time, so they want to defer the things, etc. So these are the red flags, and we have to be very cautious while dealing with such companies. So then if we go to the management discussions, or maybe press releases, and we see unrealistic business claims, bold market leadership assertions without substantiating progress in the capex or actual on ground performance, then it is a red flag. It has to be looked into. It has to be questioned. If the debt level is very high, there is short-term borrowing and which cannot be paid through the normal business because of the cash flow issues, clearly there will be stress on liquidity and there is high chance that a company will default. So those things are very, very risky proposition. Then if the suppliers or customers are very much concentrated, there are only 2-3 persons who are supplying the raw materials or inputs, and or there are a few persons who are the buyers. It is not a good business to be invested because there is high risk of default in such cases, or there is high risk of supply constraint. So such kind of business can be it may be with the related party or without related party. In all such cases, there will be high risk. So always, if anyone want to transact with such type of companies or make investment in the capital market or otherwise, there is a very much need for detailed diligence. Diligence can be not only through going into the company, but various tools, like you can compare the financials, balance sheet comparisons can happen through various tools available right now nowadays, like screeners or money control. They also give comparable balance sheet, comparable ratio analysis are provided. We can look into that and see what is the on the face of it, what is the growth chart, whether it is commensurate with the capex or even the industry. If the industry is not growing but the company is suddenly growing very fast, and also there are other red flags like debtors are increasing, stocks are increasing, then the company has some problem. Similarly, investor, or we should go to various regulator site and see whether there is any order against the company, or the script has been part of some Ponzi scheme or pump and dump scheme kind of thing. Then it is a red flag. Then if management calls are being given and which are not very much transparent, the numbers are not there is inconsistency or non-transparency in the disclosures made by the management, then there are certain problems which need to be looked into. So the company, how company is trying to mitigate the risks, that is also very important. So what steps has been taken, what kind of uh, systems and processes are there? So all those things are very important. And whenever we are making investment, or we are advising for investment, or someone is doing any transaction, it is very, very important to look into all those things. And if there are red flags, I think it is better to not to take a risky decision, but continue to be out of such companies, because there will be fraudsters, there will be persons who would try to take advantage of people's greed, small investors' greed, and they are greedy. Similarly, the investors are also greedy. So I think that this is the match between the greeds. And if we can stop our greed, this kind of things can be avoided. That is the only thing I think we can discuss.
Okay. Thank you very much, Ravi, for the Manoj. You have given the practical aspects, practical approach, practical things related to this, and what are the day and night you are seeing, how the people are doing. So thank you very much. Now, Ravi Prakash. Ravi is handling legal cases of companies. The good part is that when he read order of the companies against the company or for the company, or company is filing against somebody, or SEBI is filing and you are protecting somebody who is there. So Ravi knows things, that what types of things SEBI is looking for, what are the important parameters, and what people are doing. So Ravi, over to you. Topic is yours, and choice is also yours.
Thank you so much, sir. Well, I must confess in all fairness that it is really hard to find out any new point to speak after Madan sir has spoken, followed by Manoj.
Yes.
So I think I would only re-narrate what they have said in other words. The waves may change, but the water is old. The fox now wears fintech, not the fur. You see, this is not the first time SEBI has caught someone red-handed with fabrication or forgery. Earlier to this, there was a case by name of Brightcom, when SEBI collected information from them during the course of investigation. And it's not a very old case. They submitted some bank statements. Later on, and luckily SEBI verified it with banks, all of them were forged to a substantial extent. So this is only reoccurring. Earlier, they were selling cotton bales, tulips. Now they are selling stocks. Today, it is about apps and digilocks. It will continue to wear new masks. It might not end with our time, but as Madan sir said and everybody echoed, if we become vigilant, the fraud may fear our vigilance. Certainly, it will not die. There is another case I'll tell you. Somebody took it to different level in India. Not something to learn from, but something to avoid and be cautious about. We have heard about somebody cooking numbers, fudging stock up and down, manipulating markets. But somebody went too far. They went to bring in real world something that was not even in periodic element table of Mendeleev. A company few years ago came up with an element called Zacobite, and it's a SEBI case. Zacobite said we are going to supply it to a party in Japan, Nippon Group, associated with Nippon Group. The price skyrocketed. Later on, when SEBI investigated, it found there is nothing that is called Zacobite. It does not exist. Does not exist in science, not in periodic table, nowhere. They were banned. It was caught early and they were banned. We have seen in recent past videos about fictitious stories circulating in market, reaching to palm tops thanks to the technology. So you see, because the fraudsters are utilizing technology, that those who are to stop fraud are not as efficiently and effectively as they should. They are taking the leap ahead. There is no written principle on the wall that fraudsters are supposed to remain ahead of the policymakers. It is the game set by policymaker because the policymaker set the policy. But the fraudsters are probably more disciplined in aligning their daily habits with their objectives, which policymakers don't do. As Sir called out the lack of enforcement, virtually, which remains on paper, and even if arrives little too late in the day, by when the damage is done. And in this case, now you can only do postmortem in Gensol. Whatever you do, it's a dead body now. Those more than 90% of market cap that has eroded can't be bought back. It is gone. So what should we do? I think one is very clear, and it's my personal opinion that the individual vigilance at the investor level has to increase. And maybe education cannot do it alone overnight, but technology can. We have something called AI now that is being used in silos and silence. But sooner or later, people will resort to it. I think it's better. Investors at least start tracking the patterns by using the AI, start educating themselves. And the benefit with AI is you can really set your own learning tone with it. I can learn in a way that best suits me with AI. I'm not saying that's the 100% solution. Professional advice is definitely not going to be substituted by it. But as a step towards securing your own interest, you can, before you look out or finger point at anybody else, do your own diligence, perform your own diligence. And apart from making it as one-time activity, this is something it needs to translate into habit. Well, I can really not think of anything substantial to add to what has been said already. And virtually it will be repetition of what is already told to those in audience by Madan sir, Manoj sir, and you, of course, Pawan sir. But I can give a few tips to keep handy and in mind when you are about to invest. Do not fall for big talk without proof. If a company promises the moon, do not believe it. Look beyond the media hype. At least go for multiple source verification. Don't be fooled by tiny wins made big by as it is now a recent fervor with the fraudsters to make hype about everything. And no scams look like a scam unless it is busted. It looks like the next big thing. So one must really do their bit to uncover it and know where not to dwell. Then, so far as the shareholders' democracy is concerned, I feel that shareholders, well, although we have talked about board governance and overall governance, I think investors also have their role to ask relevant questions. Question on the financials, on the business performance, about the governance standards, for which, of course, you need to go through the material, in which as I've indicated, technology can help you now. At least ab lachari nahi hai. Question partnerships that do not fit. Don't get dazzled by fancy words used in annual reports. Check who's running the show. Watch out for money problems. Notice when key people keep leaving, as emphasized by Madan sir. And focus on real value, not hype. Look for a clear plan, not just promise of delivering something really valuable. Don't focus on noise. Try to cut through the clutter. Well, bouncing back to the issue of frauds, a recent survey by one of the big fours, and that is also a case that we have seen with Gensol. Major part of it was procurement fraud, the 262 crore rupees that they made unaccounted for from the loan they had taken from two financial institutions. They did not purchase cars as they had promised. And in the survey that this big four, one of the big fours have done, they asked the question as to how many people feel which is the biggest fraud problem faced by businesses in India. And I'll just give you a global outlook and the Indian outlook. Nearly 50% of senior executives who were surveyed, they cited procurement fraud as the biggest fraud that is being faced. At least 50% of the respondents were of this view. If you take it to the global level, there is another danger and a big danger that is lurking in shadows, that is cyber fraud, with global responses voting 44% on cyber fraud. So you see that we are now in an age whereby the fraud has also two-way fungibility. And whatever theories or legal doctrines we develop, unless until the surveillance and early warning signal system is really strengthened, all exercises would remain post-mortem, which means that there is a dead body. Either the wealth will die or the investor trust will die. In his opening presentation, Pawan sir used a quote that the real capital in markets is trust. I will add to it. The real growth is also trust. If the trust grows, the market grows. And if it falls, the market falls. So with this, I think we can move on to question and answers, sir. Because as I conceded fairly, I can really, just articulate what they have said and what I have learned from them during the program. So we can move on to question and answer.
Okay. Okay. Thank you, Ravi. Thank you. Very articulately, you have brought some new words with the new era. And Madan sir will agree because advocates loves advocates. So they also see that and the advocates of the security market are totally different. They behave differently. Okay. So now it's a time for question answer. No doubt.
And
Yeah.
nowadays, Pavanji, I tell you, it's not with you don't learn better from the senior. You learn better from the youngsters nowadays.
And I will tell you, the day has gone when you were thinking that I have all the wisdom. Now you have to think that wisdom can come and from any side, and believe me, today when I'm selecting somebody in my office for some particular jobs, whether it's a uh, advocacy, whether it's a investment banking, whether it's the youngster, they think totally different. The Gen Z market is there. So if you have to serve the Gen Z client, you have to bring the Gen Z employee also, Gen Z people also. So Arun, Madan and Ravi, Manoj, all have discussed, all have given advice. Now I have some questions, and these questions, which are very pertinent questions, and this will uh, bring out some other missing aspects of today's discussion. One is Ravi, Arun, I will ask you because your approach and other speakers' approach, it has two things. You see business, they see law also. So, what are the most common governance lapses that allow fraud to go unnoticed?
I think in my initial remarks,
Your voice is breaking.
yes, I think there are a couple of them. Yeah, there are a couple of them in terms of the serious lapses, but mostly it is related to movement of cash, project, I would say sales without cash flow. If you ask me one, it is revenues without a cash flow. Raise revenues, accelerate revenues while there are no corresponding cash flows, and then you ask for debt from the lenders, the debt increases, or you go for a preferential and an equity issue, you raise money from equity investors. The basic simple thought is keep showing higher revenues and growth, investors will come in and defraud those investors.
Okay, Madan.
Yes.
So, the same question I'm asking.
No, to me, in this, if you relate it to Gensol, to me, the moment the more and more pledge of shares and the reduction in the shareholding of the promoters, which just became 50%. I mean, the price starts falling down and their shareholding also falls. It was the peak of the price, they have already sold the shares. So whenever somebody is venturing into such companies, they just try to the price movement as well as the shareholding movement and the pledge movement of the promoter shareholding.
Okay. Ravi, Madan, Ravi or Manoj, you want to say anything on this?
नहीं सर, आई थिंक रेड फ्लैग्स तो बहुत सारे हैं. आई थिंक मदान सर हैज अरुण सर हैज flagged the financial number, which is very important. I have also told that increasing top line without cash, so clearly a biggest red flag for any company's financial health. So, and that lead to different things, like borrowing is being done to pay the interest for the banks, etc., and or let's say fresh round of equity is being infused just to cater to camouflage these things. So it is a very standard protocol of such kind of companies.
Okay. Ravi?
I think it is all good, sir. It is all covered.
Okay. Now, Madan, because you are taking session of independent directors, why do boards sometimes fail to challenge promoters, and especially the founder-led promoters?
Sometimes or always.
Majority of the members are not independent. As for last decades, we have been listening that independent directors are not independent. And I still remember the statement of Mr. Ajay Tyagi, the then SEBI chairman in 2017, April 2017. The moment he became chairman, he said independent directors are not independent and audit committees are not working. Independent directors are resigning on flimsy grounds, the fake reasons. They don't take any onus. And that's the reason. They are always, because they are always yes men. They don't read the paper, they don't read the agenda paper, they don't participate in the board discussion. In majority of the companies, particularly PSUs, it's a holiday, it's a picnic, attending a board meeting.
Arun, now there's a one dilemma. You are the independent director of a company and you are getting only sitting fees, and you have a thousands kilos liability on your head. And you have your business also, and you have to read all these things with this. So sometimes people, they become director, but they don't do work on this. So what is your call on this? Why do boards sometimes fail to challenge promoters?
I think, as Madanji said, there is a clear conflict of interest. I am being paid by the same guy whom I have to police. It is simply not possible. And these are sometimes, as Madanji said, it are holidays, destinations, what benefits accrue. I think all this is a conflict which time and again have proved that these directors, there needs to be much more in-depth legal mechanism by way of either an independent agency or something which ensures that they have a legal onus on whatever happens during their tenure, and they are made liable for all the losses which these investors have suffered. If we do that, we go with such a strict mechanism and also put them under the legal purview, then I am sure these frauds will definitely not happen, or you will see that these companies which do commit fraud will not be able to find individuals, because they know if anything happens later on, they will be behind bars. So that's the only way we can restrict this. Otherwise, in my last 35 years, I have seen enough of these frauds, and they will keep on happening.
Only one more thing, that why these independent directors, they remain silent? Why don't they devote the time? Why don't they say no when they want to say no? Why also it's only yes which is coming out of their mouth? There's no dissent at all. What is the fear? क्या रोक रहा है उन्हें ये करने से? Is there any greed? Are they not gainfully employed otherwise? If that being the scenario, I think it's a pathetic situation. If because of the remuneration or the sitting fee, they are saying yes. Because many a times I ask a question to the budding independent directors, why do you want to become independent director? The answer is, in majority of the cases, I tell you, there's a post-retirement employment, post-retirement profession. That being the thing, I'm sorry, then you will have these type of independent directors only.
What is your experience on this?
You asking Arun?
Manoj.
Yes, sir. So the fact is the same. If obviously whoever is being appointed are connected in some manner, then they have the greed, or they have the intent to get favors from the company in the form of sitting fee or other direct or indirect benefits. So that is the first thing. And after that, sometimes promoters are so big that the persons who are being appointed independent directors are even they don't see them capable to speak against them. So that is the another thing. Third thing is obviously they think that if they will oppose for somewhere, they will be outcasted from all the companies wherever they are thinking they will be appointed as independent director. So independent directors has to be like this only, otherwise nobody will appoint them as an independent director
Okay,
if they start speaking.
okay. What concrete step can independent director take to act as an early sentinel? So what independent director should do, in your opinion? Madan,
Pawan ji, can you repeat the question? I couldn't hear the first word.
what concrete step can independent director take to act as early sentinels?
Due diligence. First of all, due diligence of the company before they join a company.
Okay,
And once they join a company, they should apprise themselves about the affairs of the company.
okay.
They should go through the previous board documents.
Hmm.
What the process the board has followed being followed in the company in the committees. They should go through the agenda. They should go through the minutes of the previous meetings. And
Hmm.
then when they receive the agenda and agenda notes of the forthcoming meeting, they should go through all that in advance and should seek all sort of information and clarification before they before they do the deliberation on that. And if not satisfied, should ask again
Okay.
at the meeting. At the
But
meeting
sir, if
again.
they start asking, nobody will keep them as an
No
independent director.
problem.
That is the
Exactly.
biggest
That's
problem.
what I'm saying. It means there's a fear. What sort of fear is there?
Yes, that is the fear.
निकाल देंगे. अरे निकाल के देंगे. मुझे ज्वाइन ही नहीं करना है ऐसा बोर्ड. निकाल देंगे ना. Let them do that.
Sir, in both,
Let this then you before they nikalo
you should resign. Yes, with
you write a resignation letter along with the reasons. Let there be a good beginning. ये beginning होने तो फिर देखो आपको quality independent directors मिलेंगे आने वाले time में. So, but somebody has to take the initiative.
Hmm.
Sir,
Okay.
even in the highest of quality governed company, it is very difficult for independent director to speak against the promoters because their stature is so big. Do you think someone will be questioning Ratan Tata in the board meeting?
But
Is
but
it
but do you
possible?
think
Do you think someone will
but do you think
questioning
Ratan Tata companies are not good governed companies?
They are best governed companies. Still, if they have the question, they will not be able to ask directly with the chairperson.
I'll not venture into a particular name or a
I'm
particular.
because he is not no more here. That's why I'm asking his name. But is it possible? Their stature is so big, nobody will be able to even question them. So that happens for every stage of the companies. Even for smaller promoters, they have when they become 4,000 company.
Manoj,
they
here,
become
here I don't agree with you. If tomorrow for anything wrong, anything wrong in the company, if my neck is going to be there, certainly nobody is bigger than me. First of all, I have to protect myself before I protect others or before I
Right.
support others.
That is the best professional.
मैं जब training में भी जाता हूँ ना, who's from the industry are there as participants.
Right.
I consider them all of them as my students. That's all.
But
I'm there for them. They are not there for me. For them, somebody else can come, but I'm there for them.
Yeah, Arun, you were saying something.
yeah, so I was trying to say, in our corporate history, have independent directors ever been penalized? That's my question to the corporate, professionals team. Have ever, and if no, the answer is no. Why not? Why are they not liable? Because the retail shareholders, the institutional shareholders, we have reposed so much trust on them to safeguard our interest. And if they are not doing the necessary job, why are they not penalized?
Arun, this institution is defective. I'll tell you, the discussion which has taken place long time, first of all, issue of remuneration. Second is that if remuneration is there, then independence is challenged. And third is that their appointment and their role and their work, even if you pay them like a retired secretary of government of India, he joined. Suppose retired chairman of the SEBI, he has joined. So his stature is so big that people are not asking them. And sometimes what is happening, they are asking the question which is on the on the surface. They don't go deep into this. And third or fourth point is the system and procedure are so defective, so cumbersome, and uniformity is not there. Across companies, different types of agenda, discussion, the presentation, the MIS, all are different. So it is a cumbersome for the independent director also to do this. The institution has to change. The procedure of the board meeting, the procedure of document has to change. It has to be uniform, standardized, and then people can take part. Today, I am giving as a company, you are my independent director, I will give what suits me. You have no method to check whether I have given you complete information or not. And everything you are not expert of asking if I have not given everything. So the discussion should take place that how the institution of independent director should revamp. Second, what procedure can make them take a better decision with less time and efforts. And third is that follow-up action should be very, very strong. Until we will talk, Madan will say something, you will say something, everybody will talk. The institution will not change, because in every meeting since like 20 years, I'm listening that if you want to work from the independent director, you have to pay. And if you have to pay, the question comes that iska post-retirement or its employment process is there. So something has to take place, then it can change. Okay, coming to this. How does high-profile fraud affect not just company, but the sector investor sentiment? Arun, you tell me this, because you are investing and you are seeing me interacting with FIs and other people.
I think these corporate frauds, Pawanji, happen across the world, but there is a definitive legal mechanism to bring the culprits to book, which is lacking in India, and hence that's why the credibility of the system is at stake.
Yeah.
In this case, the retail investors have lost money. Somebody would have lost 5 lakhs, somebody would be 10 lakhs. Collectively, the promoters would have siphoned off 400 crores, but it belonged to small investors.
Yeah.
And I'm telling you frankly, I have seen enough of this. After 2 months, everybody will just forget it.
Forget. Yes.
That's it.
Okay. Okay.
Not only after 2 months, maybe after 2 weeks.
Yeah, maybe yes, Mahanji.
Because we have so many happenings in the country on everyday basis.
Yeah.
Okay. So what is the long-term reputation cost for India's capital market? Manoj, you can tell.
I think, sir, everybody knows that there will be such kind of event. So that would not, what we can say, the overall Indian market-wide impact or something that confidence of the investor, international investor would get second, because they know that these are small or mid-cap companies, and they don't look at these companies at all. And penny stock scams happening in US day in day night also. So that is not making much difference to big side investors or the worldwide investors anyway.
Yeah.
I believe so.
Pawanji, I want to make one point here. I think we keep off talking, as Manojji said, penny stock, manipulation and all. This was not a penny stock. This was a 1,000 rupees, 1,200, 800 rupees stock. So gone are the days when promoters would have a stock in penny in maybe single digit and then manipulate. Now manipulation has found different dimensions and different levels altogether.
Sir, this is a company, sir. This is a company which started with the IPO of 19-20 crores only.
Yeah.
5 years back. So
yes.
So this kind of jump is totally unheard of, and it is not practically possible. So everybody was knowing, whoever is investing,
But
most
Manoj,
of them were knowing that this is a bubble, and
renewable, green energy.
That is just
EV.
that is
I
just a
want
story.
to have a part. This can become 1 lakh crore. We have
That's what I'm saying. Whenever there is a question of multi-bagger, there is always 50% chance of collapse of such kind of companies.
So investors greed, social media.
Yes, there is investor greed,
to
and
make
that
a quick
multi-bagger, they remove multi and you become beggar. So
Yes.
by taking back a few
Right.
It
A
started
company
as
which raised only 19 crore, now promoters have the money to invest 50 crores. How it is possible?
I tell you,
3 years, 5 years back.
it started as a penny, became a mid cap, now a small cap. After 1 month, it will again be pennies.
Any stock, yes. So it is a total curve. It will go up and go down.
cycle, life cycle. Okay.
Like-
Lifestyle, yeah.
Okay. So now, what are the red flags should investor watch out in the annual reports and financials? Manoj,
I think I have already discussed all the major things.
something which is missed out.
I don't think anything I missed out. Arun sir has
Okay.
also flagged for
Okay.
something.
Okay. Arun, Madan, how can one track the assess the integrity of related party transactions? Your favorite topic.
Mm.
Integrated related party transaction.
Ah.
Certainly you can rely upon the related party transaction disclosures given in the financial statement as well in the annual report. You just can't do anything beyond that because there are professionals who are certifying these transactions. There are professionals who are not only certifying, justifying these transactions. You just can't do anything beyond that. And I relate this question with the question you asked to Manoj. Why again, it comes to why investors should invest directly then. Let them invest through mutual funds. वो
We
क्यों है
have-
annual report जाएं देखें पढ़ें और इस सब पे झंझट में पढ़ें. अगर इन्वेस्ट करना ही है इन्वेस्टर को डायरेक्टली then go to large caps only, that's all.
Yes.
Go to Nifty and Sensex based company. Why to invest in these stocks? Because
Right.
again the question comes to greed.
Yes, it is only
You
about
want to
greed.
earn 50%, 100% return in a year, maybe 200%, 500%. That is why you are tempted to invest in such company. Don't do that.
Okay.
Because certainly you cannot identify whether a related party transaction is actually genuine or not. You just can't do that while sitting outside. अंदर वाले नहीं पकड़ पाते, बाहर वाले कहाँ से पकड़ेंगे?
Okay. Arun, very interesting point. Are rating agency and analysts doing enough?
I think जैसा सब मैंने शुरू में कहा पवन जी, all this, the basic premise is the self declaration mechanism. कंपनी ने जो आपको दे दिया सर्टिफाई करके, आप उसके बेसिस पे ही अपने रेटिंग देते हो, मैनेजमेंट से मिलते हो, वहीं पर गलती है. So, and that's why I said rating, I have always maintained that stance, but it has never happened. Rating agencies should be held accountable for all whatever happens. They
Yeah,
can't, at the end, when the whole fraud has happened, they just withdraw their rating. That's not the solution.
Yeah. Okay. Okay.
It's like resigning when the fraud happens.
Yeah.
Okay. How investor identify genuine sustainable business from facade-driven hype?
सर वो जो रेड फ्लैग्स है ना, आप उसको एक चेक बॉक्स बनाइए और उस पे करते जाइए, आपको अपने आप फसाड दिख जाएगा कहाँ पर है.
Ravi, can you just tell what are the facade we should check?
Certainly, sir. One is that companies which are making tiny wins look big and they are striving to remain in headlines somewhere or other in the media every other day. One day some venture, another day some venture. So they're not actually doing business, they are doing how to raise more and more funds. That is certainly one clear red flag. Then you have to see the services or the products that they are selling or they are into. What is the quality of their product? Because the quality of product is the first level reflection of their governance or the services. Then pattern recognition. I think if you look at one paper, the picture projected there might not give inherent contradictions. But if you start recognizing a pattern, as Arun sir said, that you keep a trail of what are the information that you are keep building. Usually investors don't keep trail of things that they have checked about the company. Every time they check, it's a fresh start. So I think pattern recognition is something that can help. In that, the new age tools can really help investors. I mean, use AI to break down financial statements. These are publicly available documents. There are one prompt is self-consistency prompt, chain of thought prompt. These can really give you results about the pattern tracking. So may use that.
Okay. retail investors are often affected. How can they protect themselves better? Now, greed is there and tips are there. And interestingly, Ravi, you go to any party, you go to anywhere, people ask, koi share batao. And you tell them any share, he will follow this. And sometimes it is looking like आजकल बहुत सारी रील्स और व्हाट्सएप और ये ग्रुप पे जो मैसेज आते हैं ना, उसमें लिखा होता है कि फॉर दिस प्रॉब्लम यू फॉलो दिस, फॉर दिस प्रॉब्लम. सो सडनली मेरा एक दोस्त है, वो बहुत फनी है, तो उसने लिखा कि भाई साहब, अगर आपको डिप्रेशन हो गया है तो आप क्या करो, मक्खी के छत्ते पे जाओ, वहां से जो जो रानी मक्खी है ना, उसको पकड़ो और उसके अपने आप को कटाओ. जब वो आपको काट लेगी तो उससे जो जहर निकलेगा, आपका डिप्रेशन दौड़ में खत्म हो जाएगा. भाई वो उसने भेज दिया और वो वायरल हो गया. तो आज के दिन क्या हो रहा है कि पीपल दे हैव देयर ओन मनी, दे आर नॉट बॉदर, दे विल इन्वेस्ट व्हाट मदान इज सेइंग, व्हाट
So
रवि.
why to bother about the loss then?
I
If
think
you have the greed, then let the punishment also be faced by those people.
I think
I don't think only right way is to not to invest in such companies. If you don't have the capacity to look into the business, look into the financials, look into the governance aspect, if you don't have the capacity, you don't try to take a risk. Or if you are taking risk, then it is a lottery. Okay, लग जाएगी तो लग जाएगी, नहीं तो फिर ठीक है, नुकसान हो जाएगा. क्या problem है फिर? Why
No,
to worry about that?
no, the fact of the matter is we, the so-called educated professionals, even we don't have that capacity.
Right. It is
We
very
can't
difficult.
do
It's
that.
very difficult. Red flags will be there. So everyone seems to be intelligent to get out of it just before the fall starts, but it is not happening. It will not happen in most of the cases. You will get trapped. सब जानते हैं कि अगर बबल बस्ट होगी तो सबको लगता है मैं पीक पे निकल जाऊंगा. Is it possible for everyone to get out? That is the biggest thing.
Ravi, what should regulator do?
Pawan ji, आपका question the retail investors. My question is, are they investors?
They are making bids. It is like
Yes,
a
they are not
lottery ticket.
investors.
They are taking lottery ticket.
Majority of them are speculators.
Yes, they are speculators. So let
Yes.
the speculator feel the heat. Why to worry about them? I don't think it is the right
Ravi,
thing.
what should regulator
Discuss.
do more to investor education, strict action or proactive scanning? क्या करना चाहिए?
I think, sir, the regulator should really use technology. Now, whether if either it is now or never. If they do not deploy technology, if they do not do the advancement that is required, I have heard from credible sources, their own annual reports, that they have got data lake, AI systems, and everything. Probably they have invested, but they have not trained the manpower on it. People are not able to, optimize the use of it, and they are not digging down below the superficial level. Even the interim order, and I tell you, if somebody consults from SEBI to Madan sir or somebody, or we would be able to give them that you have probably left out these things, you have not gone into this direction. So, not only putting charge, but to be able to bring conviction based on a thorough investigation that does not leave any room for any, hyper technical defense or hollow defense, is what is required from the regulators. Surveillance, no doubt, is there. It is automatic. But what we are doing with that surveillance? How soon we are able to react? Are we reactive or proactive? And now what I feel is really damaging is that 10 years ago, when I used to hear your webinars or seminars, more seminars because webinars came out much later on, I heard that investors are being defrauded because they are gullible. Now it is not gullibility, it is the greed. Fraudsters are banking on your greed and your propensity to guzzle money. So it's clearly, I think, it's also about moral degradation of investors, that they want to make money as lottery. Certainly, if it's a lottery, please do not damage the system. Please then do not come and finger point at the whole system.
Okay. Arun, how can we create easy?
Sorry, I would like to comment on this. You asked the question to, and Ravi said that about the refer to interim order. What is the interim order saying? That you cannot access the capital market, promoters.
corporate governance on
You-
high value that पे सोचा था, but management actually.
Yeah. Arun, Madan,
Yes.
I will ask this question, Arun. How can we create easy to use tool for retail investor to assess governance and risk, Arun?
So, I think there is no way we should give this power to investors to analyze because they cannot. For them, the best way is to give their money, hard-earned money, to professionals who are doing that diligence on their behalf and are doing the investments and are taking care of all the risks involved.
Okay. Okay.
Yeah, there's no other way. Otherwise, these things investors will lose. We have seen 2014 NSCL scam. Nothing has happened. So it's always the retail investor who loses, never the smart investor.
It's a discussable point.
Okay. Any other person wants to add in this?
I think Madan sir had some point on interim order.
Okay, Madan, please, sir.
No, in the interim order, the order say these two promoters, they will not access the capital market. They cannot remain on the board of the company. But the interim order is silent. What is going to happen to the business of the company?
Okay.
Whether the business is being transferred, whether the company's manager is transferred, who will manage the business? Are you going to close down the business? So that is what has happened. The business stands closed. All of a sudden, the assets value is getting deteriorated. The value of the stakeholders is getting deteriorated. There should be interim order should talk about something simultaneously. Simultaneously, management should be handed over to somebody, to some professionals. If you do that, that will be again a signal that tomorrow if some promoter does something wrong, so my money, my investment is not going to be zero. At least somebody will be there to run the affairs of this organization. अब जो भी किस धंधे को लेने आएगा वो तो जीरो से स्टार्ट करेगा बोला I'll start from today. Whatever the liabilities are, the erstwhile liabilities, I am not going to take care of those liabilities.
Okay.
This is happening in bankruptcy matters also, insolvency matters also.
Manoj, we could have done that somebody could have taken this company, government, before taking action. What are the hurdles in this?
Well, that kind of order can be passed. I think that is the law has given power, and that they have exercised this kind of power in past also, like in Satyam case, and then but that can be done. But how fast it can be taken done and
Yes
what
Bank also
time-
they have done.
yeah, so that actually can
Yes Bank में बहुत बाद में हुआ, but we have some failed examples also of ILF as a Unitech also.
yes. Yes.
But Section 11 of SEBI, under which this interim order is passed, is virtually a drawing board. They can draw anything, any direction.
Yes.
There's no fetters in itself in Section 11.
Obviously,
something like this
it
could
has to
have
be
been
seen
done.
who are the people who can do this. Who
And
are the
unless
people
until
who-
they experiment, I mean, this kind of a blow is short going to, drain out the money from system.
Yes.
Unless until policy making is more or less experimental. So they could probably go for it.
Yes.
Okay. So friends, it's time to close now. We have discussed and this topic is always interesting. Whenever there is some fall, we again come and talk. When market is going up, then we take which is the good industry. When market is going down, we think what is the good strategy in the falling market. And when if fraud taking place, then we talk about that how to protect the investor, what are the things, what are the governance issues. This is a cycle which we all come into this arena and we discuss like this. Before closing this session, I just want to summarize this very important point. No doubt, the greed and fear is there. But in India, there is an institutional problem, infrastructure problem that investor cannot see. Arun, I'm just asking one question.
Yeah.
You are getting balance sheet of the company. And you are saying that this balance sheet is for the investor. But can you read this balance sheet properly? Can you see this that 80 page, 200 page, 500 page balance sheet, you can identify the relevant thing. One point that if you make a uniform structured annual report, which has contained 2-3 page important for investor point of view, remaining you fill any number of, I don't bother, that page you will not find. Her second is the ratio analysis, the ratio on which the company is identified and you can compare with other companies. that is also missing because number is also varied and ratios are also different. Third point is that why we are not making the independent director, which I told you, the board meeting agenda, board meeting MIS, board meeting system, a uniform. So these are certain points which we have to just work out. These are some points which we have to work out. Okay, so let's see this that how we can make it more effective, more important. And before closing, I just forget when we started the program, we lost 26 life in Pulwama and Pahalgam, sorry. And this is very serious point. And on behalf of everybody, all the participants and all my fellow panelists, we just want to give homage to them. So I'll just request everybody to just keep silence for a minute and then we can close this session after that. Om Shanti. Om. So, friends, thanks. One participant informed me, and this is good. Mr. Satish has given so many suggestions, which we will just complete. And today, majority people have given their own suggestion. So we will work out and we will do this. So, friends.
The best suggestion has come from Ravi. Whether it's a fraud or heinous crime like Pahalgam, the best solution is deployment of technology and use of technology.
Yeah, that's absolutely right.
Once you have that, certainly you are going to mitigate all these offenses and crimes.
Yeah, that's right. Okay. So with this, as a ritual, I'm just doing this. So Ravi, 30 seconds to close this particular your view. Vineet?
Yes. To investors, I will say that they should not blur their glass with greed. Questions must be their compass. They should think before they trust. To the regulators, they should not be the last one to see the smoke. They should be able to smell it much before and to act on it. Their law should not be on paper, but their law should be the reason that rules the business that people are doing.
Okay. Manoj?
Yes, sir. I think Ravi is right. If we have no capacity to analyze the company, analyze the business, it is better not to invest directly into smaller companies. Go with professionals like mutual funds or PMS advisors, and they will be protecting your money. At least I think 80 to 90% safety is there. So that is the best way to invest in the capital market. Otherwise, for regulators, obviously they have to be more proactive and take actions with the help of technology, etc., to curb them and give such kind of punishment to such fraudsters that second person will think twice before doing such kind of thing.
Okay.
That is the only way to improve the situation.
Madan sir?
Timely investigation, rather timely identification of the problem, investigation, action, and enforcement of law.
Okay. Arun?
I think enforcement and more accountability.
Okay. So I think with this, we are coming to end of this webinar, and I have received various suggestions. We will assure you that we will compile these suggestions and we will regularly sending various things to the regulator, and we will definitely send. Because we have no system to allow public to speak. Somebody has raised this. We will try to do in the next webinar. Okay. So with this, I close this webinar. And friends, as our journey of knowledge sharing is continue, so next Friday, we will again meet and with new topic, new issue, and new discussion.